Why I won't buy Tesla stock. Now, you can do whatever you want, my friends. I'm not touching that with a 10-foot pole, and I'll tell you why. Woo! This is clickbait. People are like, Tesla stock, man. This is the way to go. It's going to change the world. All right, just look at my plant food here. All right. My man Rob Arnott. Love Rob. Now, Rob with the research affiliates back about 10 years or so ago, they had more, I hate to say street credit because it sounds like Rob Arnott and the folks at research affiliates are friggin' fantastic. They're kind of the smart beta people. The people who say the S&P 500 is heavy in certain areas. If we have an equal weighted S&P 500, that will outperform when he doesn't say it will. It said it could when the markets turn, because it's S&P 500 is momentum based. Big fan. So research affiliates is good. Rob Arnott and others have been pretty negative on the markets as a whole. A big time, actually. And so they've been wrong for the last 5 years. I haven't really read a whole lot from him, just because once you're wrong for about 3 to 5 years, people don't take you as seriously as before. But that doesn't mean this isn't a good article, that's for sure. And that doesn't mean just because he's been wrong the last 3 to 5 years, he will be wrong. All right, so let's go to this. The key points. The big market, this is the article. Big market delusion, electric vehicles. 3921, and this is on Advisor Perspectives. The big market delusion is when all firms in an evolving industry rise together, although as competitors, ultimately some will win and some will lose. The EV industry, with its astronomical growth in market cap over the last 12 months, is a prime example of a big market delusion. In a highly competitive and capital-intensive auto industry, the January 2021 valuations of EV manufacturers are simply not sustainable. All right, so Warren Buffett says, if a capitalist had been present at Kitty Hawk back in the early 1900s, he would have shot down Orville Wright, and he would have saved his progeny money. Some guy, founder of Sequoia Investments, our objective is always to build big companies. If you don't attack a big market, you're highly unlikely to build a big company. All right. Big markets have a special allure for investors. They offer some promise of another Apple, Microsoft, or Google, but they also bring with them the threat of what Cornell and DeModern call the big market delusion, which generally begin with innovation or disruption that opens a new market, such as cannabis, or reinvents an old one, such as advertising. The hallmark of a big market delusion is when all firms of the evolving industry rise together, though they are often direct competitors. Investors become so enthusiastic that each firm is priced as this will be the major winner in the evolving big market, despite the fact that this is a fallacy of composition. The sum of the parts cannot be greater than the whole. Here's a lesson of the airline industry. I'm not going to get in. I just want to go down here. All right, so let's just look at the EV, electric vehicles. Like airlines, the auto industry has historically been a competitive, capital-intensive business. For this reason, despite the global demand for their products, the traditional major auto manufacturers have tended to trade at book-to-market values near or below 1, which is historic. I mean, that's just nuts. That's value right there. It doesn't mean it's a good stock, just means it's on the value side of the equation of the growth versus value. From an industry perspective, we have little reason to believe that a change in the propulsion system from internal combustion engines to EVs, electric motors, should have a pronounced impact on market competition or on total industry valuations. Now, before y'all scream bloody murder like, oh, the horse and buggies. All right, so I went into horse and buggy. I trade out my horse and buggy for a Ford Model T. Is there a significant change in my lifestyle? Unequivocally, there is. My horse and buggy can only go so far for so long, and it costs an arm and a leg to keep that horse fed out of the weather. It can only move so far. It can only pull so much weight, thus horsepower. Going from that to the Model T, where I can actually have multiple passengers on this freaking thing called gasoline, which is incredibly not just efficient, but the value of it was like a gallon of gasoline. I can't remember the horse. I can't remember. It was like 700 horsepower or something like that. I can't remember. But one, it's the word I'm looking for. The gasoline. Hold on a second, I got to think about this. Energy intensive, maybe, is what I'm thinking about. There's a word I'm looking for. I'm drawing a blank. But anyway, so going from a horse and buggy to an internal combustion engine is significant, man. Significant. Going from an internal combustion engine, ICE, to an EV is not. It's not actually. It's actually, if anything, a lot of times it's going the other way. It's not. People always use this equation like, oh, you're like the horse and buggy, and a Luddite, the horse and buggy. It's silly. All right, so let's keep going here. We examine the recent growth in market valuation for the global auto industry, focusing on the largest public auto traded companies by market cap. Over the 3-year period ending January 31st, 2021, the global auto industry gained 70% in market value. So over 3 years, it gained 70%, growing to $2.16 trillion in total market cap. Traditional automakers absorbed almost all, let's see. All right, interesting. Auto industry total value declined for the first 2 years of the last 3. So basically from 2018 and 2019, global auto industry value declined, with the traditional automakers absorbed almost all of the decline in value, while the market value of the EVs specialists remained flat. So here's from 18 to the end of 19 right here. Traditional automakers are in blue. You can see it fell from, it's at 1.1 trillion to right there. What is that? Friggin' 700 million? All right. Now here is the they've gone from 700 million to 1.1 trillion. So that's I don't even know what that is. 700 to 1.1. We'll say roughly a 35% increase. Here's EVs, the orange. They were pretty flat until 2020, and then it went from, I don't even know what that is, to almost the same market cap as the automakers, the traditional automakers. The year 2020 was a spectacular year for the auto industry in terms of valuations, as electric vehicles became the market's latest beloved company and led a remarkable price run-up. As of 31st of January, the total market cap of the 8 EV specialists in our universe was $1 trillion after a year-over-year growth of 618%, almost on par with that 1.1 trillion of the traditional automakers. In contrast, their astounding growth in market cap value, the combined total revenues remain as they have over the last 3 years, at only a tiny fraction of the revenues generated by the traditional automakers. 1 to 42 on average over a 3-year period. Furthermore, the entire industry's total revenue fell in 2020, even as share prices skyrocketed. So they have the same market valuation, roughly, but yet the revenues is $1 for every of the EVs, $1 for every 42 for the traditional. But Tesla does more than autos, Josh. All right, it's insane. Much of the increase in the industry's market cap was a result of the massive increase in Tesla. At the end of 2021, Tesla's market cap had risen to $752 billion at the end of January 2021. $752 billion, placing it in the top 10 in the world by market value. Hey! Puppies out there. At that market cap, Tesla accounted for 75% of the total electric vehicles group market value and 35% of the entire auto industry. Tesla accounted for 35% of the entirety of the auto industry's market cap. Such an immense market cap makes sense only if the expectation is that Tesla will come to dominate the entire auto industry, not just electric vehicles. Such an achievement requires that both Tesla's brand and technology become so dominant. Hold on a second. Such an achievement requires that both Tesla's brand and technology become so dominant that the company can earn profit margins that exceed those of Ferrari on a level of production that exceeds Toyota. If that scenario is reflected in Tesla's price, it should be also reflected in the falling valuations of its competitors, including competing electric vehicle specialists, whose market share should decline in favor of Tesla. However, the reverse is true. While Tesla's stock price has been skyrocketing, the price of competing EVs have been doing the same. Although the concurrent price increases of most conventional automakers could not be described as skyrocketing, they were also increasing. The market value of all 8 of the EV specialists more than doubled over the 12 months ending in January 2021. And the market value of 3 of those rose more than tenfold. The market values of 2 Chinese EVs, Li Auto and XPeng, First listed on the New York Stock Exchange in July and August 2020, respectively jumped 110 and 150%. This is freaking nuts. When we exclude Tesla from the electric vehicle specialist group's 1 trillion market cap, the combined market value of the other 7 EV companies is $268 billion, 1/3 of Tesla. What could we buy for that $268 billion? We could not only buy Toyota, the largest automaker by market cap, at $228 billion. So we could buy Toyota and still have $40 billion left. But we could also buy the most profitable automaker, Ferrari, the automobile maker with the highest profit margin. $268 billion this is of the 7, excluding Tesla, electric vehicle makers, is the approximate market cap of all the other major German automakers, Volkswagen, Daimler, and BMW, which account for 17.6% of global sales. Exploding market value naturally leads to high valuation metrics. We compare the trailing 12-month price of sales for the 37 automakers in our analysis. Due to massive price and sales increase ratios of the new electric vehicle manufacturers, we use a logarithmic scale. For instance, Tesla is valued at 28 times its 2020 sales, a far stretch compared to the average price of sales of 1.1 for the traditional automakers. The pricing delusion is not exclusive to Tesla. In fact, Tesla's valuation multiple of sales is only a fraction of some of its competitors. Nikola, Electra, Mechanica, Xpeng, Li Auto. Where's that NIO thing that Jason over at Fighting Words Financial talks about? I didn't know anything about it. I just don't pay much mind. Electric vehicle global sales grew to 3.25 million in 2020, an increase of 43%. The rapid growth is partly driven by regulatory policy and a substantial package of incentives developed by various governments to promote zero-emission vehicles, because it doesn't take anything to produce. In Norway, the government has actively promoted EVs with generous tax incentives. Remember, there's only 5.5 million people who live in Norway, just FYI. EVs held about a 54% market share in Norway. In the U.S. and across Europe, governments provided cash subsidies at different amounts to boost their sales. In China, the top electric vehicle manufacturers are state-owned and therefore enjoy strong government backing. The momentum of EV adoption is also being positively impacted by changing consumer preference in favor of EVs as consumers grow more concerned about environmental pollution and global warming. Market disruption, consumer preference, and social benefits will likewise characterize the early air travel industry do not necessarily imply high market values for electric vehicles. Competition drives profits toward the cost of capital unless new firms face daunting barriers to entry. And that is an issue. Simply, higher sales will not lead to higher profits if auto manufacturers face strict competition. All right. Let's see. At an aggregate level, as cities strive to become more energy efficient, light vehicle sales may actually fall. I completely agree with that. All right, let's see what else in here we want to see. Note that in 2000, Palm, the maker of the ubiquitous Palm Pilot, was spun off by his owner 3Com at a valuation larger than GM and larger than 3Com itself before the spinoff. After only a few years, Palm was put out of business by BlackBerry, which after only a handful of years was itself on the ropes because of the iPhone. Why should the EV market be immune to successive waves of disruption? Tesla led global sales in 2020 of EV market with 15%. In China, the world's largest EV market, the Tesla Model 3 topped the 2020 sales list with a 6% market share. Even so, its sales remain small compared to the traditional manufacturers such as Toyota and Volkswagen. To justify its current valuation, Tesla must grow by an order of magnitude or 2 while increasing its margin at the expense of its competitors. The hallmark of big market delusion is when all firms in an evolving industry rise together even though they are direct competitors. Yep. Even the price of the traditional manufacturers such as Ford, GM, and Volkswagen have risen during the first months of 2021 solely on their basis of their EV plans. Another explanation of Tesla's astronomical valuation is that the market was valuing the company's full-stack vertical integration business model and its ability to disrupt other markets, batteries, solar panels, space. In particular, the full self-driving capabilities that Tesla is building could allow the future deployment of robo-taxis for higher revenues. What about the other EV companies? Do they share a similar advantage in their business model? Will they be playing on a level field with Tesla? If so, the competing technological advantages grant each a higher profit margin, or will margins compress at a competitive market as market sorts out winners and losers? Today, virtually every EV automaker, in particular new entrants, are being priced as if they will be a winner. The most recent example is Lucid, which went public via a SPAC called the Churchill Capital Group. Before the merger, the market cap of Lucid after the deal completed was estimated at $56 billion. According to Lucid's recent financial disclosures, the company expects to spend $10 billion over the next 4 years, an amount far exceeding the $4.4 billion it was sent to receive from SPAC financing. Such a high cash burn reflects the aforementioned competitive and capital-intensive nature of the industry. To date, Lucid has yet to sell one car, but its market cap was initially expected to exceed Ford's. The market cap of the worldwide auto industry, in conclusion, more than doubled. The driving force of the new electric vehicle market. It's not even new, man. We've had electric vehicles for years. As a result, the stock price of virtually every EV specialist, including more established firms such as Tesla, all skyrocketed. Even the prices of traditional automakers rose handily when they announced their own plans. All right, so there you go. So there's no way, I tell you, man, that's nuts. I'm not touching that 10-foot pole. You do whatever you want. I mean, I would call it speculation as opposed to investing. But there's no way I'm buying it. Love to hear your thoughts. I know we're going to get some people, you don't understand solar panels, batteries. It's always a batteries, 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 as if batteries are new technology. It's crazy. All right, we'll see you.